All right, what's happening, guys? Welcome back to another episode of Sensible Investing, where we look for sensible investment ideas to build your wealth. Now, the topic of today is 2 stocks to buy and hold for the next 20 years. So before we get into it, as always, everything that you see on this video and on this channel for that matter is all in my opinion and should not be construed as financial advice. And before you buy anything, you should always do your own research. Okay, so let's get into it. Now, 2 stocks to buy and hold for the next 20 years. So you guys might be thinking, that's a pretty big call. I mean, anything could happen to these companies over the next 20 years. Nobody can tell what the future is. So how can you be so sure that these stocks will be okay over the long term? And the answer to your question is, in most cases, I would agree with people to say, look, it's impossible to buy a company and know it's going to do well over the long term, except for very, very special occasions. So on very, very few occasions, if we think about the 70 or so thousand companies that's trading at the moment in the world, I would argue that there are probably no more than about 20 that I would be comfortable to buy and hold and leave it there, not touch it, not look at it, just set it and forget it.
30 seconds, spray and walk away is simple solution to lichen, algae, mold, and moss. But one spray, problem solved. Look, lichens dying. Look, I walk away. Look, lichens still dying. Look, I still walk away.
And then come back in 20 years and realize that it's made a nice gain on my money. So these 2 companies, the first company that I've chosen, Auckland Airport, and the second company that I've chosen is Berkshire Hathaway. So at this point, you guys might be thinking, okay, so why Auckland Airport? There's about, hundreds of airports across the world. Why specifically Auckland? And no, it's not because I have a bias, because I am a Kiwi, but because I think that this is probably the best monopoly that you could buy into out of all airports in terms of how well run it is, how strong its competitive moat is, and just in general, how safe I believe this investment idea to be. So 2 simple reasons. The first reason is Auckland Airport is basically a government-owned monopoly with no immediate, midterm, or very distant future competitive threats due to its unique geographical situation. And I don't foresee that changing in the next 20, 30, 40, or even 50 years. And in my opinion, it's probably one of the safest companies that you can put your money into in the entire world. So what we're going to do is we're going to have a look at the unique geographical situation of New Zealand first. Then we're going to do a deep dive into the unique geographical situation of Auckland and why I think that makes its competitive moat so strong. So as you guys can see over here, good old New Zealand in the middle of the ocean, in the middle of nowhere. So no competitive threats from the road, unlike in other countries where you can catch the train, for example, across Europe, or you can drive across Europe. Basically, your only option is to fly, unless you want to catch a boat. Your closest country is probably Fiji and Australia, and on a boat, that's going to take you a good week or 2, right? So your only option for getting in and out of the country in a time-effective manner is by the airplane. Okay, so let's have a look at the safety. The safetiness, that doesn't make sense. Let's look at how safe Auckland Airport is as an investment. So as you can see here, it's government owned, and the government has a very, very large stake in this airport. So the likelihood of it going under is low, and if it ever does run the risk, which I believe it doesn't because it has very healthy financial numbers, the government's just going to go bail them out, right? But unlikely. Okay, and so you guys might be thinking, well, what if it's a dodgy country? What if both the airport and the country is dodgy? And again, I'd encourage you to do your own research. But as you can see here, New Zealand, very well-run country in my opinion compared to every other country there is. So no immediate risk of the government getting in trouble, and I don't foresee any risk, or long-term risk of both the government and the airport getting into trouble. Okay, so let's talk about Auckland's unique geographical situation and why it makes Auckland Airport such a monopoly with virtually no threats. So as you can see here, there's a map of New Zealand. The darker the color of the regions, the more densely populated the place is. And as you can see, the most densely populated region is Auckland, and Auckland Airport is located bang smack in the middle of Auckland. So just a bit about New Zealand. Total population just under 5 million. Auckland has almost 40% of that population, and New Zealand only has 3 airports. Now, what's even more interesting is if you look at these figures over here, and just make sure to pay attention to the bits that I've circled, you'll notice that of all long-haul flights that come into New Zealand, Auckland Airport gets 94% share. And they get 75% of the share of all international flights, okay? So if they're gonna catch the airplane into New Zealand and 94% of long-haul flights and 75% of all international flights flying to Auckland, you're more likely than not to fly out of the same place that you flew in, okay? And not only that, but as you can see here on this little bottom bit, 40% of the population actually live within a 2-hour drive to Auckland, 40% of all of NZ's population. So what you're talking is sort of the upper end of the North Island, the middle of the North Island, and as you can see, very, very densely populated. Okay, moving on. So the other reasons that I really like this investment, now there are a lot of reasons to like this investment, but if you just pay attention to the circle on the left, you'll notice that all of their land is freehold, and there is currently 250 hectares of land just sitting there ready to be developed, okay? And 250 hectares, that's massive, right? So it's gonna take a lot of development to use up all of that land. So there'll be room to develop for many years to come. All right, moving on. Now, they've got very diversified revenue streams. So as you can see here, they've got actually 6 main revenue streams, and we'll cover them 3 by 3. And as you can see, it's very diversified, right? So you've got aeronautical, retail, and car parking. Now, for those of you who aren't too familiar with New Zealand, the transportation system is absolutely horrendous. And I shit you not, we don't even have a proper city train line. So most of the time, you'll either be busing or driving. Most people drive to the airport, and as a result, parking makes a lot of money. Okay, and then the other revenue streams. Now, what I wanted us to really focus on is their investment property. And as you can see, that's just consistent revenue streams and the fact that they're the #1 retail venue in all of New Zealand. But what I also wanted us to focus on is actually their associates. Now, previously they had a stake in North Queensland Airport. I believe they bought it for about 50 million, and they've just recently sold it for $370 million. But the biggest reason is actually if you have a look at Queenstown. Now, again, for those of you who aren't familiar with New Zealand, I would encourage you guys to do some more research on Queenstown to understand how crucial of a tourist destination and how popular of a tourist destination it is to New Zealand. And as you can see, Queenstown Airport, privately owned. The only way you can invest in Queenstown Airport is through Auckland Airport. Okay, moving on. Now, the other thing that I like Auckland Airport is that even in the event of economic uncertainty, crises, whatnot, they have proven for the last almost 20-something years that they've been okay, and that they have continued to grow steadily throughout then. And as you can see, when the whole world's economy went to hell and we had the Great Recession, it probably affected them all of, what's that, about just under 5%, and then they were back to growth the next year, steadily growing year on year on year on year on year. So as you can see, a bit of an unstoppable force, 5.7% compounded annual growth rate since 2000, and very, very shock and crisis resistant. So great investment, safe place to put your money. All right, and just a final little bit of a comment in terms of the tailwinds that are going to help Auckland. So New Zealand's population is going to grow exponentially, right? So it's a very popular place. It's next to Asia, lots of migration, immigration, very popular holiday destination. But the other interesting thing is that Auckland's population is projected to virtually double, right? So as a result, there are going to be more flights coming in. So 94% of the extra flights, double that. The long haul flights, 75% of the international flights, double that. So your money is going to be great long term. So you can just set this and forget it. All right, guys. So moving on. The second company that I've chosen is Berkshire Hathaway. So why Berkshire Hathaway? And the answer to your question is pretty simple, because of these two gentlemen over here, but especially this gentleman on the left. And I'm sure that this gentleman on the left needs no introduction. Warren Buffett, third richest man in the world, greatest investor of all time by an infinite margin. And as you can see, since the age of 14, he started his investment career. And he built that. I mean, who even has $67,000 at the age of 14, right? So since the age of 14, he started his investment career, and he built his wealth up and up and up and up and up until today. Well, actually, that was back in 2015, but today he's worth about 90 billion. And so the blue line over here is the actual wealth that he had, and the bars over here are the inflation-adjusted wealth. So as you can see, the way that he's compounded is absolutely astronomical. So he's the chairman and founder of Berkshire Hathaway, and yeah, as you can see here, worth about 90 billion US dollars. So what we have here is we have the greatest investor in the world running, in my opinion, the greatest, I wouldn't call it an investment company because they don't call themselves a hedge fund, but they're effectively that without calling themselves a hedge fund. So the greatest investor in the whole world running the greatest investment company in the whole world. And if you were to have put $1 of your money and had given it to Warren Buffett to invest for you back when he started, you would have made, well, as you can see the percentages here, quite a lot of money today. So just wanted to quickly run you guys through the different list of assets owned by Berkshire Hathaway and why I think that this is such a good investment idea. So when you have some time, log on to Wikipedia and have a look at all of the different companies Berkshire Hathaway owns. So in my opinion, this is probably the best index fund you can buy, except the difference is that the management fees are, well, okay, let's compare. So first of all, let's compare these to index funds, okay? So index funds, when they buy stocks, they don't really care about when they buy the stocks. They could buy it when it's way overvalued, they could buy it when it's way undervalued, or they could just buy it whenever. Whereas what Warren Buffett does is he only ever buys things that are undervalued so that you get a good return for your money. So what you have here is a bunch of undervalued companies that are most likely going to perform over the long term because Warren Buffett buys for life, and he's already handpicked them for you and done all his due diligence. Now, I know a lot of you guys who are starting investing in the stock market, you guys think here that you can pick stocks and make a great gain. I can tell you right now, most of you won't be able to do that, and you'll be probably better off just giving your money to Warren Buffett and letting him invest it for you. Okay, the second reason to like Berkshire Hathaway is if you compare the way that they make their money versus the way that every other investment company makes their money, you'll notice that they don't make money unless you make money. And you're going to make some money first before they even make money. And only when you make money and then make some more money, then they make money. Okay? So they charge no management fees. You get 6% for free, and then anything over 6%, that's when they take a cut. Whereas if you look at stockbrokers or investment funds or pretty much hedge funds and anybody else, they make money regardless if you make money. So if you lose money, they still make money. If they make money, if you make money, then they make even more money. So basically, you're screwed either way, right?
I gotta say, I'm incredibly excited to be a part of your firm. I mean, the clients you have are absolutely...
Fuck the clients. Your only responsibility is to put meat on the table. You got a girlfriend?
I'm married. I have a wife. Her name's Teresa. She cuts hair.
Congratulations.
Thank you.
Think about Teresa. Name of the game, move the money from your client's pocket into your pocket.
Right, but if you can make the client's money at the same time, it's advantageous to everyone, correct?
No.
As a result, what happens is Berkshire Hathaway and the people that work there and run it have a lot of skin in the game, whereas other hedge funds and even ETFs don't. Now, ETFs are actually a lot cheaper in terms of their fees. I believe it's 0.3% per year per $10,000 that you have invested. But again, I believe it's better to just give your money to Buffett, let him work its magic, come back 20 years, and you'll be a lot richer for it. All right, guys, so as you can see, the other reason to buy Berkshire Hathaway is because most investment funds or hedge funds or fund managers, they failed to beat the market. So if you had put your money in an index fund, you would have done a lot better, and you would have saved a lot more on the fees that the investment managers would have charged you. So that's one of the reasons to buy Berkshire Hathaway. Now, the other reason is, yes, you could leave your money in an index fund, but as you guys can see, what we visited before, this is Berkshire Hathaway's performance over the long term versus leaving your money in an index fund over the long term. And that we're talking the difference between a 15,000% gain versus a 1.1 million% gain over the long term. Okay, so the other reason to buy Berkshire Hathaway is because whenever the company becomes undervalued, Warren Buffett always buys back his own stock. So similar to the first video that we looked at, where we looked at the more of something there is, the less it's worth. The inverse has happened here, where the less of something there is, the more it's worth. And so whenever a company buys back their own shares, they retire these shares. There's less of them in circulation, which means that whatever shares are existing and in circulation are worth more, which is again better for you, so that when you come back 20-something years from now, your stocks will be worth a lot more than what they are, and you can either hold some more or you can choose to sell or whatever. All right, so at this point, you guys might be thinking, well, how old is Warren Buffett? What is he, like 80, 90? And when's he getting ready to kick the bucket soon, right? So when's he getting ready to kick the bucket soon? Are we all screwed if he dies? What are we going to do? What's his succession plans? I heard this guy drinks a lot of Coca-Cola and eats McDonald's every day, okay? And all of that is true. But what I wanted to let you guys know is that Warren Buffett has handpicked two very capable successors who's actually been investing Berkshire Hathaway's money for the last quite a while, actually, about the last 10 years. And so, them buying the likes of Apple and Amazon, that was Ted and Todd's decision. And if you do some digging, you'll notice that Apple is actually a major part of their portfolio. Okay, so what this shows is that you've got very capable successors, handpicked by the best, and I suspect he's trained them to be even better than he was, that will take over the company. And as you guys can see here, these guys are sort of mid-late 40s, early 50s. Okay, so the likelihood of them kicking the bucket in the next 20 years, very low, unless something unforeseen happens. All right, so that concludes our episode today. If you guys are interested in looking at Berkshire Hathaway shares and Auckland Airport shares, I've listed their ticker symbols below and the exchanges that they trade on. Now, there is a Berkshire Hathaway Class A share, but the Class A share is about $300,000 a share for one share. Okay, so most of us here don't have enough money to buy that. So what you can do is you can buy the Class B shares. Okay, and they've gone up and down, very similar to the Class A. So, you know, no problems. It's not that you're getting anything worse. It's just that the Class A shares have a lot more voting rights than the Class B shares. Okay, and Auckland Airport trades on the New Zealand Exchange and the Australian Exchange. So, guys, that concludes our video. Make sure to hit the like button if you enjoyed the video. Please subscribe and hit the notification bell if you want to see more videos like this. And feel free to leave a comment, ask any questions, and even suggest some topics that you would like me to make for the next video. So until then, happy investing.